Hey, thank you for coming back to the Tax Corner with Iron Rhino Forge and the Tax Goddess. And we also have Jacie from Red Front Forge joining us as a guest today. I think last time we did an introduction to the Tax Goddess, I think the top tax strategist in the country. And Jacie is a Forge and Fire competitor, and she is the in-residence sword maker at Urban Metal Studio as well.
Hi, everybody.
So, Shauna, last time we talked a lot about why should somebody who has a hobby that they're passionate about, like blacksmithing, a craft, why should they use it as a business? Why is it a smart move to use it as a business? We will take the tax deductions and all that. I got a lot of feedback from the show, and one of the questions that kept coming up was, how would I use my craft business to fund my retirement? Let's say it's not my primary income. I've got a W-2 job. But I want to really boost my retirement account. And I thought I'd bring that up as something we could talk about today.
Absolutely. Yeah. And now I'm sitting here going, the sword with the tax sword. I'm getting whole images in my mind with Jacie, but we're going to focus on retirement first. I love it. So yeah, when you have a business, part of the question always comes into, do you have a profit? Do you have a loss? What happens at the end of the day with a business? Okay. But there are really three different numbers that a business owner needs to know. So the first one is, how much gross income do you bring in? So gross income is every dollar from every source that relates to your business. So it would not be your W-2 income, but if you sold a sword, sold a knife, went to a show, did a consulting, taught a class, anything at all related to your business, that is going to be gross income. The next number that's important is cost of goods sold. So cost of goods sold is the actual materials, whatever it is that you use to build your craft, whatever it is. So if that's iron, if that's, I don't know enough metal terms, but if that's the electricity bill in your shop, right? That could be considered a part of cost of goods sold, because you have to have those things to be able to build the product that you're actually selling, okay? So that's the second line item. The third line item is your net profit. And that is after all expenses. So after you've taken a portion of your home office, Jacie's beautiful home office with all of her books here, a portion of your home office, a portion of your cell phone, a portion of your car, and all of the other types of general overhead expenses that go into you having a business, that's going to be your net profit. Now, why am I explaining three different categories? What does that have to do with retirement, right? There are different types of retirement plans based on either gross income or net income. So the reason why I want you to know specifically those two, cost of goods sold is just kind of in the middle there, so you kind of need to know. But the reason why you're looking at gross income and net income is because different types of retirement plans are based on one of those two numbers. So generally, if you are a small business, right, as you said, this example is somebody doing this on the side, they have a W-2, but this is kind of like we're not going to call it a hobby. This is something they are actively trying to make business income at, right? This is a business. There are certain plans. So for example, exactly, tons of revenue. That's what we want. Forge and Fire, making swords for King Arthur himself, whatever it is. But yeah, what we really want is profit. I mean, that's what the IRS, that's why, if you saw video one, that's why the IRS allows you to take business expenses, is because you have a motive for profit. Okay. So different types of retirement plans depend on whether you have profit, so net profit, or no net profit, and on gross or not. So let's go over some of the primary examples. Okay. Most common types of plans that most people know about, you have a 401k, which is very standard. A lot of people have that already at their W-2 jobs. But did you know, very few people do, that at a W-2 job, your 401k program is not actually run by the government. It's checked by the government, but it's actually set up by the business that you work for. So if that's the business where you have your W-2, or if that's your own business, you can actually have multiple 401k plans. So if you're already maxing out your retirement at work and you have some spare cash and you want to fund a 401k through your own business, you can do that. The total amount currently in the current year, right, today is 2022, the current year, the maximum amount between any 401k plans of any kind is $61,000 a year. Right. A lot of people, in their minds, they go to their employer, their W-2 401k plan, and say max it out, and it stops at like $19,000. Okay. So there's an opportunity here. Whereas if you have a business that has some profit, has some cash that it's making, or even if it's at a loss, but you have cash that you want to put into retirement and get a tax deduction for, ding, 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 right? You can create your own company 401k plan, and across everything, do a total of $61,000. So it's one way you can kind of get around having a limit through your current employer. Now, there's another way, and one of my favorite hidden gems of the tax code is something called a defined benefit plan. Okay. Yep. So those are the good ones. Those are the really big ones. So depending on your age, defined benefit plans, you can generally put in a lot more than a 401k. Okay. So the 401k, there's two different categories. There's a defined contribution plan, which means the government defines how much you can contribute. So the maximum is $61,000. Or if you've ever done a Roth IRA or a traditional IRA, the maximum is $6,000, or whatever those limits are. It's a defined contribution. In defined benefit, it looks at the other end of that calculation. So it says, okay, the defined benefit is when you reach the age of 65, your company has determined that your benefit, your defined benefit, is you will receive $1 million a year at retirement at the age of 65. Okay. Well, in order for your company to meet its promise, right, its defined benefit, it has to fund huge amounts into a defined benefit plan, which, by the way, are all tax deduction for the company, in order to meet that requirement when you hit 65. So depending on how old you are, if you're 20 setting up a defined benefit plan, you might only need to put in $20,000 a year to hit that 1 million. But if you're 50 and you're trying to hit that 1 million, right, the company has to put in for you $300,000 a year. That's all a tax deduction for the company. If you have a tax deduction for the company and your profit from the company is now negative, your negative profit will offset your W-2 as long as it's a business with a reason and a purpose, which basically means you don't pay a penny on your W-2 taxable income because you have a business and you're following the proper retirement sections. So Jacie's like dying. Go ahead, ask.
Okay. So first of all, awesome. Second, I have heard that you're only allowed to have a negative profit or show a loss 3 years in a row. So if it's two. Well, that's
yeah.
last year's audit. Okay, so if I'm putting all this money into a retirement plan, how do I manage to still show a profit?
Yeah, and it's a great question. It's a great question. So let's back up a step and let's talk about that 2-3 years. What does that look like? What does that mean? Okay. So in the code itself, it's more of a, I'm going to call it a general rule that the IRS auditors play by, the CPAs play by, like it's just kind of, this is just how it's done. So for the first 2 years of a business, you are allowed to have a loss. And that's very standard, very common because businesses take a while. You've got to pay for marketing and you got to buy equipment. You got to do all this stuff to be able to start up your business. Okay. Year 3 forward, you're supposed to have a profit. Supposed to is a very subjective, big picture asterisk kind of idea, right? Because how many businesses, let's look at, for example, the drug companies, right? You might form a drug company. You spend 10 years research, development, pouring out money until you ever make a penny, right? So a lot of this is very dependent. It's not a hard rule, 2 years or 3 years or what that number is. After 2 years worth of losses, that third year for general businesses, the government does want to see some sort of a profit, because otherwise the question is, well, why are you keep doing this, right? Why would you just spend money unless it's a hobby? And obviously we don't want to be classified as a hobby per video 1, right? Like we absolutely want to make sure that we are a business. So you are 100% correct. If I'm dumping $300,000 into a defined benefit plan, yeah, you better be selling a lot of swords, lovely Miss Jacie, right? Like you got to be making a lot of money to do that. So you have two different ways to kind of look at that. One is, I am 50, and so I'm going to start this business and I'm really going to make a go at it. And for the first 2 years, I'm also going to go massively fund my retirement account. And then I'm going to kind of like back off, right? Or, in the third year, you better be ready to make some profit.
So I guess my follow-up question is, would you like a $300,000 sword?
I love it. Yes, you see, Etsy, be prepared. The fees they get on that is going to be amazing. Yeah, so really, and this is a part of the question, right, is what else can you do? I mean, from the IRS's perspective, what are you doing to try to make this a real business? Okay, because we absolutely have had cases, year 3 is a loss, year 4 is a loss, year 5 is a loss, right? But what are you doing to try to get over it? How big is that loss, right? If your loss is negative $300,000 year over year over year, government's going to say, so how are you funding this business that you're doing, right? Like normally if a business is losing money, what are they going to do? They're going to cut back on expenses, not go further into expense. So when you really look at these big plans, like the defined benefit plans, you really kind of want to have a little bit more income. You kind of want to be growing and you're out there and you're really trying to make money. But if you looked at a smaller plan, like you putting in $19,000 to a 401k with your main W-2 job, and you're going to make up the difference to $61,000 with this business, okay, it's money, but it's not all of the money, right? So I think that's really one of the biggest questions, and a phrase that always warms my heart, right? Pigs get fat and hogs get slaughtered. Mm-hmm. So when you're looking at taxes, right, look at, well, what is reasonable? What would a third-party business owner actually do in this situation, right? And if you feel like you've got an argument and you've got some backup and you've got some reasonableness to why you're making the choices you're making, you're probably pretty good. Probably being a big asterisk there, right? You better be able to prove it is kind of the deal, right? Why did you do what you did? One of the key phrases for the IRS is this expense ordinary and necessary? So if we were to look at you anything you ever purchase, you run through that filter, right? Is it ordinary and necessary? So if you, and Jacie, I'll just pick on you, right? So if right now your business is making $150,000 a year net after all expenses, right? You're making $150,000 and you've been on Fortune Fire, right? You're at the top of your game, right? And you're getting calls from all of these people saying, hey, come work for us. We'll pay you $200,000, $300,000 to come work for us so you can make more money for us. It would absolutely be reasonable for your company to try to hold on to you and say, wait, no, please don't leave, right? Like we'll give you a pension, we'll give you more money, we'll give you a defined benefit plan, right? So a lot of this is about thinking about what is ordinary necessary for the business on top of course, what can you do reasonably, right? Without going to the hogs getting slaughtered line of thinking. So great question. Okay. I can see Avi's pondering. Avi, what are you thinking about on that front?
I'm thinking if the first 2 years of my business I can take a loss, after that I have to start showing a profit. How frequently can my business actually be at a loss before I'm at risk? Like, is it 1 year to showing a profit, then the next 2 years I can show a loss again?
Great question. Yeah, so there are definitely other audit factors that come into play, right? When you start looking at that kind of stuff. So if the IRS starts to recognize a pattern, patterns are generally bad, right? Patterns are generally, to the IRS, they're bad. Generally, patterns are you were pre-planning what you were doing. And of course, I look at that going, well, yeah, that's my entire job as a tax strategist is to pre-plan what we're doing, right? But most businesses have fluctuations, right? One year they make a lot of money, next year they don't. Something happens, there was a big festival and we sold tons or not, or whatever, right? It can really kind of move around. So, is there any way to completely audit-proof yourself and say, do it this way, do it this way, do it this way? No, which is why I always come back to pigs get fat, hogs get slaughtered, right? Like, look at what you have, look at where that money's coming from. Would it be reasonable for another business owner to do this in that circumstance? So,
okay. It sounds like a defined benefit plan is great if you have a lot of revenue flowing through your business, if you've got high margins. But maybe for a lot of hobby businesses, or not hobby businesses, craft businesses, people who are investing in a craft aside from their main W-2, it sounds like opening up a second 401k would be a smart choice for them.
And it really, I mean, you hit the nail on the head. It really depends. That's why we started the conversation with how much profit, right? What is your gross income and how much profit are you making? Because if your profit every year, before you start mucking around and doing things, right? If your profit every year is 2,000, you might want to look at the smallest of the retirement plans, right? Which is an IRA. That's the lowest limit is about 6,000. That's an IRA, right? Okay. If your profit is hitting 50 or 60,000 every year, that might be more the 401k. If your profit's hitting 100,000, that might be more the defined benefit plan, right?
Got it. It sounds like for a lot of people, an IRA, not a 401k, but an IRA might actually work well if they're beginning out. They've got a little bit of profit coming in. It's not going to, they're not going to fatten up any hogs or anything. They're just going to take a little extra money, put it into a retirement account that they've got. It's not something that they're going to spend 40, 50 hours a week on.
Right.
But they're going to, if they have, a couple grand a year, then instead of spending that on, a nice dinner once, a nice dinner, or maybe I had a business once. Actually, this was kind of funny. It was when Twinkies went out of business. Went and bought a bunch of Twinkies from a warehouse before they, got emptied, and sold them for like $50 a box on Amazon.
Woo,
didn't make us a lot of money. We didn't get a lot of inventory, but it made us enough to take a little trip. Right? But it sounds like instead of taking a little trip, this might have been another option. Instead of taking a little trip now, maybe I just put that money into a little retirement account.
I just have this vision of people showing up to David's house, just going, "You got any of those Twinkies?" I'm jonesing. I'll pay you next week. You got any Twinkies? You gotta help me.
Either that, or like do you remember like the old trench coat? Like, hey, do you want a thing? Yep.
Want a watch? Want a Twinkie? Got a ding dong for you.
Now, okay, I actual tax question here.
Okay.
So you've discussed the IRA, which is the 6,000.
Yes.
The 401k, which is the 61,000 total, but that's combined with your W-2 job if you have.
Yeah.
And then defined benefit, which is essentially as much as you can put in it.
You got it.
Now, obviously, I think any business owner, I'm always trying to grow, and grow my revenue. So if I were to start out with an IRA, could I roll it into a 401k, and then if I get there, roll it into a defined benefit plan, or am I stuck once I pick something?
Great question. Really great question. And I want to bring up, don't let me forget, I want to bring up one other option that is really good for flexibility. Okay. Because I thought you were going a different direction with that question, but there's a good one. So you're absolutely correct. Those things are definitely separate from each other. So an IRA is an IRA, a 401k is a 401k, and a defined benefit is a defined benefit. Okay. Generally, you can roll down, but not up. Okay. So, but that doesn't mean that you can't have multiples, right? So you can have an IRA and a 401k and a defined benefit. You can absolutely have, but they're going to be separate accounts, because the defined benefit plan is really run by the company. Your 401k has a completely different set of regulations than a traditional IRA would, versus an IRA. You can go to a bank and just say, I want to open an IRA account, and just start putting money in it, right? It's very easy to do. So as you get bigger, there's more regulation, more people involved, it's harder. But if you ever wanted to go down the chain, you can take money out of a defined benefit, roll it into a 401k, take money out of a 401k, roll it into an IRA. The IRA, if you were thinking about like cars, for example, there are so many cars out there that are built on a truck chassis, right? There's like a baseline to the vehicle. That is the IRA. The IRA is the baseline. It's been around, well, I was about to say the longest, almost the longest, but it's the easiest, accessible, least amount of documentation program that exists. Okay. There's one more. So, so give us the goods, Shauna. So there's one more. So the three types of plans that The three types of plans that we've spoken about are all what are called tax deductible. Okay, which basically means if you put money into a traditional IRA or traditional 401k or traditional defined benefit plan, I get a tax deduction now, but with the IRS, anytime you get a good, you get a bad every single time. Okay, so if I get a tax deduction now, what the IRS is saying is, yep, take your tax deduction now, no problem. When you're 65 and you go to pull that money out, you're going to pay tax. Mm-hmm. Yep, exactly. Give us the tax on that money. Okay. So there's a different way to look at this when you are at a loss in your business. Okay. There are insurance programs, and I know half the audience just turned off your ears. I'm gonna say this right off the bat. Okay. I am a CPA. I am not an insurance salesperson. You can't call me and buy anything from me. Okay. We would refer you to proper people that do this kind of thing. Okay. But insurance is a tool, just like anything else. Okay. Just like an IRA, just like a 401k. One of the things that I love about it. So you have different types of insurance, right? You have insurance if you get into a car accident. You have insurance for your health. You have insurance for your home, right? If there's a fire, something like that. Okay. This type of insurance specifically sets up your own bank. It's called infinite banking. And I am in love with it as a tool, as a CPA, as a professional. Okay. So here's what happens. And I'm going to give you my specific example because I literally just used my bank to purchase the home that I'm standing in. Okay. So there's some really cool things you can do with this. So here's your baseline. Okay. If you were going to do an IRA, $6,000, right, a year, I think that works out to, let me run that number, $6,000 divided by 12, that works out to $500 a month. Okay. That you'd be putting into this IRA bank account. Okay. If you're at a loss in your business, right, maybe making a bigger loss, maybe it helps you, maybe it doesn't, depends on your tax rate, all of these kinds of things, okay? But if you believe that your tax rate in the future is going to be more than your tax rate now, okay? So you're building your business. I'm trying to get more revenue. I'm trying to get this thing. I'm trying to make it bigger. My tax rate's going to go up, not down, right? So one of the things that I love about insurance, you can take the same 500, put it into an insurance program. There is no tax deduction now for that. So you don't get any tax deduction. However, there are two major benefits that all of the retirement programs don't have. The first one is when you get to 65, it's completely tax-free, all of it. So all of the earnings, all of the growth, anything you've ever done with it is completely tax-free. So that's huge, okay, especially if you think your tax rates are going up, not down. And with how much money the government is printing for COVID, I'm pretty sure our tax rates are going up, not down. Okay, so that's the first one. Second one that I love about it is that you have access to your money. Okay, with an IRA, a 401k, and a defined benefit plan, once the money is in the program, maybe you have rights to borrow from a 401k, but in an IRA and a defined benefit plan, that money is locked, done. Out of sight, out of mind until you're 65. With an infinite banking program, you put your money in, your car breaks down. You need $20,000 to go buy a new car. You can borrow it now, right now, like within 72 hours now. And there's no penalty, there's no tax, there's no nothing. And that's why they call it infinite banking, right? So it's not quite a retirement program from that standpoint, but it kind of is if you treat it like a retirement program. Okay.
Is there a minimum I need to be able to make in order to fund this? Or
nope, none. It is.
So if I'm a small business, let's say I'm an engineer for my W-2 job, and I also have a small business. I have a blacksmith workshop. Maybe I make $500, maybe $1,000 here and there. Yep. There's no minimum. I can just take whatever money and put it into infinite banking, and yep, over time it will accumulate, and I can use it whenever I need.
You got it. And for a lot of people, yeah, I mean, super cool. And for a lot of people, they're already paying an insurance for when they die, right? I mean, many people have kids or houses, they want to pay off a mortgage or leave some money for the spouse or whatever it is. By going with an infinite banking program, I was going to say if you die, when you die, because that's going to happen, okay? There is a death. I'm never going to die.
Death
but
and taxes.
Yeah, death and taxes, baby, every time, right? There is a benefit on the other end of that, which is a death benefit. It is an insurance policy. Okay. So for a lot of people, if you're already paying $200 a month for life insurance, you're just reallocating your money to basically fund your own bank. So it's a super cool option.
Why is that not just the answer?
I love you, Jacie. Absolutely fantastic question. Let me give you, well, my personal example. Okay.
Like, it sounds awesome.
It's fantastic. I think they're absolutely fabulous. Okay, so let me explain why this isn't the answer. One, a lot of people don't know about it. They honestly, I mean, neither of you two had ever heard of it, right? Most people have never been taught this. Okay, so it's not a very well-known strategy versus everybody's at least heard the term IRA, 401k, right? These are kind of, yeah. That whole thing actually came about in 1976 when the government said, we want the people to be more responsible for their own retirement versus us. Think Social Security crash, right? So yeah, that's when the government started marketing 401k, IRA, put all your money, this is what to do, this is the instruction. Insurance programs get used by the huge families, the Rockefellers, the Kennedys, right? They use life insurance specifically because when you pass away, life insurance is also not taxable to your heirs at all. Mm-hmm. So huge from that standpoint. Okay. The other reason why some people use it, so for example, myself, I use a combination. I use both life insurance and I have a 401k program, right? And I use that combination because in some cases I do want a tax deduction, right? And in some cases, I want the money to be accessible whenever I want it. So you kind of look at it from a bigger overarching picture and say, well, what is the proper balance for you? But if we're talking, smaller dollar amounts, this kind of $6,000 IRA type amount, or you're already paying for life insurance, but your life insurance policy does not have the infinite banking capabilities, like you can't borrow, you can't get at it, this kind of thing, it might be a big consideration to shift, look at, basically the tax world works at looking at the big picture all together. So how are all of the pieces of my puzzle fitting together? So, great question.
Okay, that makes sense.
Thank you. Can you guys hear me?
Yes.
Okay, I lost a certain amount of audio on mic, so I can hear you guys just very faintly. I'm gonna stop things here because we're coming really close to the end of our time. Ooh, and I know Shauna can talk about taxes and financials just until the cows come home. So I had a question. Excuse me. I had a question because I read an article about the IRS hiring a bunch of auditors.
Yeah.
And I was kind of worried about, does that need to concern me?
Yeah. I'm not a fearmonger. Okay. But yeah, you should have your paperwork in order. Okay. So basically here's the deal. Federal government released it's the Inflation Reduction Act. Okay. Inflation Reduction Act, which I just realized the IRA. Anyway, the Inflation Reduction Act, excuse me, as a part of this, they added $46 billion with a B, $46 billion worth of funding to the IRS. Okay. Now, how does the government fight inflation? Okay, well, they raise interest rates or they go after taxes, right? So
they're clearly going after the big rich people who don't pay taxes, right?
Clearly, absolutely. No, right? Because the big rich people, right? The big rich people have lawyers and they have strategists to keep them out of trouble, right? This kind of thing. Okay. So no, unfortunately, the articles that have been released, right? And this is all at the moment, this is what they're telling us. So we'll see when the actual practice comes out. But the articles that have been released, the IRS is hiring or has already hired 87,000 agents across the US, which is a massive number. Okay. And they will be going after businesses that are making $200,000 a year or less, which means they are absolutely going after the little guy. Now, I'm so sorry. Jacie, go ahead.
No, I'm just sad.
So
I would have never thought the government would screw me.
So for all the NSA agents listening out there, yes, no, I mean, but
my personal FBI agent knows me.
Your personal, So here's my advice, okay? Because you always want to have advice, right? So the first bit is go back to the past couple of years. Generally, the IRS can only audit about 3 years back, okay? Sometimes it's 3, sometimes it's 4. If you did Al Capone stuff and you're really doing some fraud stuff, okay, it might be like 7. It could go longer than that, okay? But go at least 3 years back and make sure that if you're writing off expenses, you have the receipts, you have the bank statements, you have, whatever kind of proof it is that you need for the expenses that you've taken on that return. That's always step 1 in my mind. Second thing is if you get either a letter from the IRS or we've already started seeing it, agents physically knocking on somebody's door and leaving their business card saying, call me. So those are the 2 types of audits. You can either get a letter, which is called a desk audit, or an agent, which is a real audit, right? Like now it's a face-to-face audit. Very first thing to do is please don't panic, okay? Reach out to your CPA, your tax preparer, your tax strategist, like whoever. Make sure that they know the instant you receive something like that, because the more time you have to prepare and create your arguments and get all your paperwork together, the better. So don't dig your head in the sand. Reach out immediately, right? And then the next thing, of course, kind of goes back almost all the way in a perfect circle back to our very first question, which is, well, can I really create a loss? Is that 2 years out of 3 years? We have a lot of business owners that are intentionally starting to become much more conservative because of this news, okay? So Tax Goddess operates on an aggression scale, 0 to 10, 0 meaning the IRS never calls you never ever, 10 meaning we're all going to jail. So the highest the Tax Goddess will go is like an 8. Really, we're crossing all the T's, dotting all the I's, but you might get an audit, okay? You, as a listener out there, you have to decide where you sit on that scale. Where do you feel comfortable, right? Do you want to be at a 2? Like I want to take a couple of things, but I really never, ever want to talk to the IRS. Or do I want to be at a 20 and we have to pull you back so you're not going to jail? Like where do you want to be on that scale? So, yeah.
Hopefully they wouldn't want to audit a sword maker.
If you're listening out there, I think the biggest thing, well, it goes back to pigs get fat and hogs get slaughtered, right? Be careful with what you're taking. Make sure you have a reasonable, is it ordinary and necessary for me to have spent this money on this thing based on my business, based on the amount of money I'm making, those kinds of things, right? But if it is, and it is reasonable, then you're fine. You might get an audit, and audits are always a pain, right? It means time, it means paperwork, it means these things. But if you did everything according to the law, you're fine. So, yeah.
I'll make sure I have my shoebox.
Yay! Oh, that is a tip. Side note, if you ever get audited, I would highly recommend that instead of handing the auditor a shoebox, you hand them a very well-organized tick-tie tape of here's all my deductions and here's where the numbers come from and all the rest of it. I promise you, because if you are nice to the auditor, let me phrase it this way. I've had multiple cases. In Tax Goddess, we just turned 18 years old this past month. Thank you. We've had 13 audits across that entire time. And so I've seen messy shoebox clients and really well organized, like we're talking highlighted with the little flags with paper clips, organized, okay? The auditors that come in and you hand them a perfectly documented, highlighted sum total with tape, everything kind of audit, the audit takes about an hour because they look at you and go, there's no way that she would have missed a single penny in this because look at how organized this paperwork is. Versus the ones that are messy, and this with actual auditors telling me this, if I come in and there's a shoebox and you're going to make me dig through it, I'm going to give you some pain. So I would highly recommend that you have your stuff super pretty and tight and a nice little bow and everything. Here, auditor, and here's everything you could want, all the good things. So
well, if there's one thing that blacksmiths are known for, it's not hoarding things and being super organized.
Clearly.
Yeah, tidy and organized and sterile.
Yeah.
Time to hire a bookkeeper.
Speaking of,
All right. Hey.
Thank you so much.
Oh,
Yeah,
it's my pleasure.
I just wanted to point out we're a little beyond time, and I really, really appreciate, Shauna, you taking time for this, especially during tax season, because I know this is how crazy the business is right now. So thank you so much for coming in. Next time I'd really love to get a little bit of an overview. I think we skipped this to begin with. I think a lot of our viewers would be really interested in what is a tax strategist versus a CPA, because we didn't really dive into who you are and your background and the articles that you participated in on Forbes and things like that.
Yeah.
But next time, remind me. Let's highlight you a little bit, and then we'll see what other questions come up. Ladies and gentlemen, thank you for joining us as well. Thank you for watching our interview today. If you have questions, I'd love to know about them. Tell me what's going on with your business, with your blacksmithing or bladesmithing business, and let us know what questions we can answer for you next time.
Perfect. Well, thank you so much. It's been such a pleasure to be here. This was way too much fun and absolutely loved spending time with you guys. And you're right. I love what I do. So thank you for cutting me off. I talk too much.
Well, anyone who knows me knows that I love working with people who have passion, and your passion really comes through. So thank you.
Well, thank you. All right.
All right. Till next month or next time.
Sounds like a plan.
All right.
Bye, everyone.
Bye.
Thanks.